Good morning, everyone, and welcome to Nadex Morning Analysis. It is Thursday, May 20th. My name is Todd Rich. I'm with Nadex. With me, Mr. Brian Caprice from Keep Trading Simple. Brian and I are going to talk about some hot spots in the markets where you might want to be looking today. Before we get into those, I do need to share this quick disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And please do not construe anything that Brian or I say today as a buy or sell recommendation. We are doing this for your education purposes, so please keep that in mind. All right, so I just kind of want to recap sort of the things that went down yesterday, because today we're seeing maybe this is a little bit of the calm after the storm from yesterday. Yesterday, some incredible volatility across the board. Today, we're looking at a much calmer open. Equities looking maybe slightly lower, maybe slightly in the green. We'll see what happens in 45 minutes. But right now, everything's looking relatively calm. The big news of the day, clearly everyone was speaking about the FOMC minutes. How's that going to be impacting inflation? How is that going to be impacting interest rates? If you didn't catch it or didn't quite get all of it, really the big headline from that was that the Federal Reserve is talking about slowing down maybe some of their purchases of bonds. Now, they spend a lot of money, $100 billion more on bond purchases. Now, what does that do? When they're constantly buying bonds, they're basically backstopping this bond market. And by backstopping that bond market, they're keeping the bond prices high, which keeps yields low. All right, so it keeps interest rates low by them continuing to buy these. If they slow down those purchases, they stop buying $120 billion of bonds and they only start buying $100 billion. All right, so they slow it down. That means there'll be some piece of that where the Fed isn't the one that's keeping the price artificially inflated because they're willing to buy. The free market would set the price and they would come in and buy those bonds. The price might be a little less than what the Fed is willing to pay, which means interest rates on those bonds might go up a little bit. It's a way for them to very calmly turn the knobs. They just simply slow down their bond purchases and let the free market go in and buy them. The Fed does not go back. They hold the size of the Fed's balance sheet would blow your mind if you actually saw the size of it. It might be a number that I can't even say, meaning I don't know if we've invented a number that big yet. But they will never sell their portfolio. They don't go out there and start selling and putting pressure on the bond market. They simply hold those bonds until duration and let them mature, and they just disappear. So the Fed never goes out and sells those bonds back out. They'll just slow the purchase of what they'll hold. So let's see what that means. We'll see how the market interprets that. I think where we want to start today, let's take a look at the. I think the first place we could certainly take a look is oil's wild ride yesterday. I think oil's wild ride yesterday is definitely worth a peek. And there's some interesting formations showing up in gold as well. So, Brian, that was a pretty long intro. A little bit of education in there. I think we're definitely going to be seeing some more education this session as we hash out what happened yesterday. Brian, do you want to go ahead and take it over and let's talk a little bit about what we're seeing in crude oil?
Yeah, so I mean, I mentioned it yesterday, and I said I wouldn't be surprised with the action that we saw for oil to come in as expected. And again, I do webinar; it's back-to-back webinars, so I'm pretty sure I said it with this group. But one of the things, again, we've seen kind of the control of different markets, and you saw yesterday we really hit that 830 mark and tanked down right into the oil inventory report. And again, the overnight was from the European session was basically a sell. U.S. traders jumped in. We continue to sell. Oil inventory report. Whoops. Just put it right back up top. Oil inventory report came in basically what's considered flat. Okay, let me explain this real quick and the importance of it. So far this year, you guys can see that pretty much everything is red or green, right? The actual versus the forecast. If we go back long enough, you can see January 13th, we had one other flat instance. If you look back again, all in 2020, there's July, there's one last year. And if we go all the way back down, so there was one time all of last year that the forecast came in as they expected. Typically, the market knows this. They look at the percentages. They say, listen, it's going to be a miss. Where can we drive it? Do we drive it low? Do we drive it high? This is what you would call a more or less a fake out, right? You see the Europeans shorting it. You see the U.S. opening going, hey, we're jumping on board. Everybody shorts it, and then all of a sudden it comes in as expected. And the market's natural response is what? It goes up. The reason why is because oil was exactly as expected. There wasn't a great imbalance. And what we saw was a parabolic move in the U.S. session and a full retracement back up until, again, the European session today. And it's doing it all over again. It's dropping down very, very fast. Around that 6, 7 o'clock, we have all the profit taking. And the reason why it's happening at 6:30 is because the U.S. trader's not there. It's just the UK oil trader in the market. This is such a big drop. They were able to drive it down from 63.93 all the way to 61.93. So again, a $2 drop in oil in a very short period of time. They collapse profits, start selling, and that's what's driving the price back up again. So the big question is, has anything really changed in oil in the last 24 to 48 hours? And the answer is no.
No.
We talked about levels, and again, were they the highest quality levels? No, not really. But again, they were levels that we had saw buyers step in way back over here, right, in the past. So was it a turning area? Yeah. Well, could we trade it now? Yeah, we probably could. I mean, it's continuing to go higher. I would assume that it comes back into the $64 range. Again, maybe $1 worth of movement. There's not many headlines today that are really affecting it. If you look at, the Australian data was kind of mixed as far as recovery goes. A lot of it, I think, is going to depend on what Macklin says today about the recovery in Canada. And again, oil, he may mention oil prices. Remember, crude oil is one of the biggest imports. It really drives the Canadian economy. Unfortunately, the Philly Fed Manufacturing Index coming in much, much lower than expected does not help the oil story today. And then unemployment claims is completely mixed. Forecast was 453. The actual came in at 444. You're like, yes, that's great. But then once again, they adjusted this higher. And this is becoming a problem. Look at this. All the previous, you guys see the lines? They're having to keep adjusting. They're like, hey, we get it in, and then it goes back up again. So it kind of goes back to the quality of data you're getting. Like, can you trust the actual number because it's going to go back? And you can see, sometimes there's adjustments up, but for the most part, we keep getting the actual, and then bam, they keep raising it. And again, it can happen. But, when you're forecasting 450 and you keep coming in closer to 500, are we really where we're supposed to be? So, again, manufacturing slowing down a little bit. Unemployment claims, again, going down, but we know they're going to revise that higher. So, kind of one of those things. And looking at the overall economy, again, I would say that we probably have some profit taking coming back up. But I don't see oil for any reason today coming back up into the 66 range. So, although it was very, very volatile, you guys can see how much movement we've had. The European session, a $2 move, which is over the daily ATR. Typically, we have one of the two sessions is the big guy, right? You guys can see big one, big one. This one was more or less even. We have one big one, one big one, one big one, one big one. Our big one's in for the day. So the question is, do we kind of start stagnating right now? And again, do we rally back up into the 63.70 range? And from there, I would say if we can get back up into, kind of this level, I wouldn't be surprised if we have a little bit of a rollover just from U.S. profit taking at this point because there's been a retracement and again following back down. But I don't see it really going much past that. I mean, it's probed through twice now at the 62 level. I think if we can reach this 62, I think the media is going to jump all over this. I'll actually put this right here at 62, right? If we can break through that, I think media is going to take it over. They're going to be like, whew, are we going to 61? Can I get lower? Can I get lower? It's going to be like one of those auctions with the guys that speaks twice as fast as I do, if that's possible.
Yeah, right. Yeah. Let's just take a quick peek over on the Nadex platform. And honestly, the way to potentially play oil today would be in the binary options.
Yeah.
Not expecting a crazy volatile day, but can you pick a level that you think it's going to be above or below? And what are the probabilities? We'll see how it plays out. I do think it's rather interesting that here's that European session yesterday. The U.S. inventory report comes out, and boom! It made that full retracement and then traded sideways all day, and in fact finished the day all the way back. I mean that's rather remarkable. And then as soon as here we go, the European session starts. and they just did it again. And I'm not sure why. You never really know why. And here we're starting to see that exact retracement, as it's not doing it like it did last time based right on that report. It's just doing the creep up. Again, with no news out in the market and no real reason, it might just trade between those ranges. Be aware of the 64 range above and the 62 range below. But that those are places where we're seeing sellers and buyers come in, supply and demand, with no other news out there. It gives you some ideas on what you could potentially consider doing for the day. Let's take a quick peek. Do you want to take a quick peek at gold? I think there's a lesson that we could actually do.
So
well.
Gold is very interesting the way that it's set up now. So FOMC is always a big deal. The data we got out of it is kind of I don't want to say disappointing, but at the same time it is, because they're like, yeah, you know what? Maybe next meeting we'll talk about it. But yet everybody else in the world, all the professional analysts, all the big names out there, everybody's talking about inflation, and the FOMC just keeps pushing it down. And yesterday we saw a big movement down, and then again from the U.S. trader coming in, it's like, hey, listen, they're going to talk about it. This is it, and we got a big rally up again. They kind of did some profit taking at 10:30, right around the open, because it had spiked so much up to that 1891 level, and then came down and kind of right in this level here is where we got FOMC, and you can see it went down, right? So it's an interesting pattern. Again, this is one of those things to watch, but you can see we have these, the highs are getting lower, right? But at the same time, we have the lows getting higher as well, kind of that consolidation. But take it one step back, and you can see really 90% of the price action, minus this quick spike down and this quick spike up, is all within the same level. And we're talking about a level in a range between 1874 and 1862. It's a $10 range. With everything that we're seeing, it's one of those things that gold traders have to be definitely getting frustrated at this point. And now they're consolidating down, waiting for a move. They're waiting for a headline to go somewhere. I would say right now, the two areas and two levels that I'd be looking out for, and again, we're kind of smack dead in the middle right now, so it's one of those ones. We got sellers above and buyers below, but 1891 I think is still good. It was front run and it halted this. And again, the bottom was put in at an aggressive point. I'd say 1855, but 1846 below would be a little bit better of an entry. We have definitely a tested piece there too. Silver is the same exact story. Here's silver. FOMC came in right here, right? We talked about it dropping. It came back up. The U.S. session open, dropped down again, and it's still stuck in that kind of the same range, right? We've been spending a lot of time in here. Silver's at 0.03, gold is at 0.05. So neither one of us move. There's so much indecision out there. They're admitting that there's inflation. There's been actually, in some of the notes, if you guys want to go through, here's some of the media, and they're talking about, there'll be some time before substantial progress is made, okay? Participants agreed economy still far from Fed's goals. Okay, most earnings look really, really good right now. Saw some taper talk starting and upcoming. So again, we're going to see it maybe in a few meetings. And then a couple of the Fed policymakers raised risks of inflation building to unwelcome levels before sufficiently evident to induce policy. So it's one of those things. Typically, the Fed tries to get in front of this before it becomes a problem, right? Now they're saying, we'll maybe talk about it in a couple meetings. Some people are saying, hey, listen, this is going to end up getting to bad levels before we do anything. So yeah. It's starting to get mixed. The tide is starting to turn on this one, but unfortunately, the big policymakers are not on board yet. They're not doing anything about it. And again, I would say the lesser names, but the guys that are becoming more vocal are saying we need to watch this. This is going to become a problem. And the worst thing that the Fed can do is wait till the problem is too big to be able to make changes. It causes major problems where we are right now with the economy being, again, sensitive after a pandemic. I mean, we are raising up. We're seeing.
And I think that's what they're doing. I mean, I think everyone is hypersensitive, so I don't think they want to say anything that would be construed as inflammatory or shocking. I think they're going to introduce it slowly, let people kind of. It's like you're on a hot summer day. You're right. Sometimes it's just better to jump into the cold water and I think they're trying to let people get acclimated to it a little bit.
Yeah. I think they're doing things behind the scene. I don't think everything is announced. I think they're managing this behind the scenes. The way I think at this point, whenever, and comments are taken out of context very, very easy in this market. And again, the result is crazy movements back and forth. At this point, there's more behind the scenes that we don't know. Not that we have to know. I mean, there's transparency, but there's managing things behind the scenes that we are not seeing. I think there's bigger problems out there right now. I think they're going to see them. And I'll tell you right now, I mentioned the political kind of aspect of this. And again, it's 9 o'clock. I don't want to go much farther, but understand if they manage this the wrong way, there is going to be a recession that comes from this. And there's going to be major political implications that come from it, especially when we start talking midterm elections, coming out with strong recovery. Right. There's a lot of politics about to get involved with this.
Yeah, and hopefully the Fed stays out of the politics. I think right now they're just sort of, they're watching it. By the way, Brian was drawing his little chart. I was just drawing it as well. There really is a consolidation going on here. It's rather interesting how you're seeing that in gold. I just wanted to back up a little bit and just remind everyone that, this is gold consolidating after we've watched it step. I mean, we've watched it step. I think that's the last step I got. We've watched it step higher, and now it's sort of at a level where, okay, let's wait and see. So I guess we really have to kind of wait and see. We don't have a crystal ball to see what's going to happen today. It is, again, there's not a lot of news out there. Quiet open to the market, but there's probably going to be some trading opportunity. And with binary options, there's always trading opportunity because you can, there's strategies where you say, is it going to be above or below a level? And you can make your prediction knowing that your risk reward is determined when you place the trade. I mean, there are other types of trades that we've got covered where if you think it's just going to kind of hang out in a range and not settle outside of a range, it's going to stay between certain areas. There's ways for you to play that as well. To be discussed another day on various binary option strategies where you use multiple binary options. With that, Brian, is there anything else you wanted to throw out there?
Nope.
Anything on an equity index or anything that you think?
Not really today. Like I said, everything's kind of flat right now. We'll have to see what the news headlines take. But the only thing really moving is NQ, and even that, I wouldn't even say that there's anything earth-shattering today. So.
All right. Well, with that, yeah. So let's just stay on our toes today. With that, any questions for Nadex, please email us. We are available to help. Customer service at nadex.com, whether it's about the contracts, the products, the platform, your account, please. If you're having any challenges at all, we can't help if you don't reach out to us. Brian is also very accessible. His email's there at the bottom, support@keeptradingsimple.com. Please feel free to email Brian. He is available. You can ask him questions as well. That's kind of what we have to cover today. Interesting moves in oil the past couple of days, big volatile swings. Keep a lookout for a potential retracement after the sell-off last night in the European hours. And we're seeing that consolidation in gold. And let's see how the market interprets some of these inflation numbers and where people think it might go from here. With that, Brian and I will be back tomorrow morning. We want to wish you all good luck in the markets. Thanks, everyone.